This is Tom Aspray with the Viper Report Market Wrap video for the week ending October 25th, 2024. Well, this chart of the 10-year note yield tells the tale of the stock market for the past couple of weeks. Particularly because we dropped down this support, MACDs were positive, so a push higher in yields was not unexpected. We broke the downtrend here, and we have not yet overcome the 61.8% resistance here at 4.309. 30-year yields have, and 2-year notes have not. So the technical situation here shows no real signs that the rally is over. If we see a lower close early this week, say below, 4.100, that could be enough to roll the MACD lines over. You can see the histograms have formed a divergence here. They formed a similar divergence at those lows. So we're heading into the jobs report this Friday, and that likely is going to help convince investors whether the Fed has stopped cutting rates for a while. Let's look at some markets. This weekly chart of the New York Composite shows the sharply lower close. We're still above the 2-week and 3-week lows here. Both AD lines, pretty much all the AD lines, have turned lower. Stocks only, of course, has taken a bigger hit. Theoretically, it probably would take another week of similar negative numbers to get it to its moving average, and the support right in here. All AD line looks quite a bit stronger. Typically when you see this one big sort of bar down, you are going to get some further selling in the week ahead. Heading into the election, I still think this will be viewed as a pullback in an uptrend, as no matter who wins, the longer term trend in the AD line suggests that stocks are going to again move higher by the middle of November. Close doesn't quite look as bad on the S&P or the spider chart, and the AD line has held up better. Minor support here at its moving average and at the September low, of course much stronger down here. So no signs from it of a more pronounced or sharper correction. Looking at the weekly QQQ, it did better. It was up slightly for the week. Okay, AD line also is down a little bit, but still, shows no signs. I mean, it's got a bunch of support levels here. Really, this support down here from, early in the spring is the major one. The RS, the weekly, has turned back above its moving average, so that's, favors growth over value heading into the big week of earnings, which may be significant. Looking at the daily chart of the QQQ, shall we bounced off its moving average, as we hit it on Wednesday's decline. Still shows a bullish pattern here. A drop back to this support line wouldn't really change the trend. Here's more important support, these lines B and C. And the daily RS is just reached that key resistance we've been talking about for a while. So, that suggests that it's likely that it's going to be a good week for the Qs, and likely a good week for at least, some of the big tech names. Not quite as good from the Spider Trust daily chart. You can see we bounced below its 20-day EMA, and then we reversed and closed weak, on Friday, or down slightly anyway. AD line closed the week below its daily EMA and weighted moving average. So, this is the next support to watch. If we get a decisive break below that, we could move back to this line B. Stocks only shows a similar negative pattern, and the stocks, the NYSE all, is holding up better, but it has next support, at the high we made in late August, early September. High-low is still looking a little toppy here, so lower highs than the number of new highs. That's a sign of a rally that, maybe losing some upside steam, but, it can last a while. I mean, we saw, lower highs here in the end of the last year, and we dropped down and then started another strong trend. Also, there was a similar divergence in here and in here, and only one of those was accompanied by a spike of the new lows. So far, we haven't seen that. We see a move above 100 NYSE new lows, and the week ahead, we'll be more concerned. Both the VIX and the VXN rose a bit on Friday here. You can see that they're both slightly above their moving averages, still below the resistance level that I'm watching, and that's sort of the key here. If we get a strong move above that, something else may be going on, but not at this point. It was a rough week for small caps again. You can see after the high last week, we reversed to the downside, closed below the prior week's low. Never a good time technically. So the 20-week EMA is at 112.96. So our stop is a bit below that. So, overall the pattern does look bullish, but it keeps running into headways up here. And, pretty much anyone that's bought the small caps, for most of the past couple of years is holding a profit. But it's been pretty frustrating. AD line made a new high, as commented last time, but has pulled back. So, if it drops below these two lows, I'll be forced to turn a little more bearish on the group, but haven't yet, though we could get stopped out. The weekly growth value ratio perked up sharply, up a couple percent last week. MACDs are getting closer to turning positive, and looks like this long sideways pattern is going to be resolved in favor of growth. Of course, another higher close this coming week is needed to really support that, and that is more likely given what the RS analysis is doing. So it uses a different formula, and so it's both pointing towards growth over value. Let's get right into the sector analysis. Big change this last week was the XLE dropped from 66 to 41. So, this looked to be a sustainable bottom with all these things. But coming into this week, of course, the increased hostilities in Israel and Iran may have an impact or may not. XLB had a rough week, went from 91.7 to 50. Not a lot other significant. XLP is still negative, but it did improve. Healthcare got worse. And the rest of them sort of stayed in their range. Made it down below 50 and are moved back above it. So that's a sector to watch. Only XLY was up for the week, based on Tesla. XLK, XLC, and XLE were down less than the one. They held up, they were down less than the SPY. And XLB was the weakest, down 3.8. XLV was down 3%, 2.8% in XLI. And, XLF was also under pressure. So if we look at the, for the week, 66.2% of the ETFs closed above their quarterly pivots. A bunch of negative weekly sell signals, including international and mainly, let's look at that list here. So here are the new sells. EMB, that's a USD bond. The IFA, South Korea, FPT Biotech, also IEV, ITB, the home builders. We'd taken out our last long position, so made some okay money on it, but it reversed pretty quickly. VEA, VGK, VPL, all Vanguard global funds, and also the VSS, which is the all world small cap. So XHB, another casualty of the higher rates, as was XHE in the healthcare equipment. For the growth ETFs, 90% are above their quarterly pivots, 80% positive weekly, but only 20% positive DTS. So that could change this week, particularly with a bunch of growth stocks having earnings. Value ETFs, about the same in the quarterly pivots, stronger with a weekly DTS, but weaker slightly, as only KRE has a positive DTS. Leverage longs, basically are positive. Short ETFs are negative. You can see this chart of the SPXL. That's the triple long. Made another new high here. But the stochastic confirmer, made a significantly lower high. If you compare that, and we wouldn't want to see it drop below this level. The volume is barely positive, but not by much. So looking at some of the sectors, 3GTS and XLB, that's about the only ones. XLP and XLV are also negative on the 3D day. New daily sells in XLF and financials. A couple of the components got hit pretty good, so it'll be interesting to watch this week. We don't want to, in terms of the major trend in the financials, we wouldn't want to see the 3DTS turn negative on it, and XLU, it held up okay, but it also negative DTS. QQQ, the bright spot, it gave a positive DTS. The only bright green on the entire table. So, GLD is still looking strong. SMH has held up pretty well. Give it, it bucked the trend as well, but it's still got a negative DTS. And SPY, you can see, has had a little more trouble. Negative DTS 4 hour and 1 hour. So those are the things we'll be watching next week. So if you run through the sector report, which was sent out early this weekend, so if that appeals to you, let me know. I might be able to do it in the future. I had to go out of town for a bit. Energy sector 41.7, so it dropped below that 50 level we normally watch. You can see 50%, of the weekly are positive, and 50%, obviously the rest are negative. So we have PXD, Hess, ExxonMobil, and SLB are some of the positive ones, and everything else is pretty red. So materials had a rough. I was surprised that Newmont and some of the steel companies did not do very well last week. So Dow Chemical gave a weekly DTS, added Sherwin-Williams, part of the home building, the higher yields. And, when it comes to higher yields, it's yields had broken down when they dropped to new lows right before the rate cut, and now they've rebounded more strongly, than expected, certainly. So, was the break down in yields a fake out, or is this current break up in yields a fake out? Usually you go with, the first signal. So I would say that the, trend is towards lower yields, but next couple of weeks will be critical. So industrials holding up pretty good. We got Caterpillar, and we got Boeing even, and UPS. And we go down to the consumer discretionary. The big mover was Tesla. Technically, consumer discretionary deteriorated during the week, so I reduced the position size below where we closed, so that may not have been a great idea. You can see 83% across the bottom, quarterly pivot, weekly DTS, and 3-day DTS. Consumer staples still look sick. Healthcare looks sicker, and only a few of the drugs, are positive, so it's got 16% positive 3 DTS. That's pretty weak. Financials, as I said, we're, got hit a little harder than we thought. Goldman Sachs gave a daily DTS. MasterCard did. American Express, and, towards the end of the week. Information technology, interesting ones we'll be looking at next is Microsoft, because it was positive DTS and flipped to positive 3-day. So we're going to see that same thing in Intuit. Meta's not on this particular scan, but Apple we're still long, and Meta's looking a little more interesting too. Texas Instrument also flipped back to positive. And as I said, the semis have held up much better than some of the other markets. Charter Communication also gave a 3-day, so, and it's above its pivot. So that's one, we should be looking at. Still like that sector, 91.7. It's still, I was writing an article, and I noticed that it was in my, Teflon sector list from a couple years ago, and still is acting great. A quick look at the themes report. Infrastructure's trying to improve here. Now a lot of new green. Looks a little better in aerospace, and LHX gave a new DTS on Friday. Oil and gas, same sort of problem as before. XLE is getting down to key support. Still closed above its pivot, so that's the level we're watching. The largest ones you can see, Microsoft, Tesla, Meta, is all positive except the daily DTS. So, a positive DTS early this week could be quite interesting. And Google is also positive DTS on Friday. So, for the Dow, it's pretty much Microsoft. In last week's post on Forbes, if you want to see all of my posts, you can go to Forbes:Tom Aspray, and you'll get this lovely little list. And it's all about the strategists raising their S&P targets, whether that was bearish. Coincide pretty nicely with this week's pullback, as did a short-term peak in the bullish numbers from the American Association of Independent Investors. But I think it's too early. Typically, we've seen this behavior in the past, is that they stop raising their targets. I mean, it's been sort of a couple of firms have done it like 4 or 5 times in the last months. So, then they'll keep their targets. Usually, a significant top, still appears to be off into probably 25. And of course, more articles are on the viperreport.com. If you'd like to sign up for any of our services, I'll be putting the current positions up on the website early part of next week. And hope you found this beneficial. And either way, drop me a note at Tom@Viper Tell me what you liked or what you didn't. And have a good week. Going to be fun the next couple of weeks.